Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Thursday, December 27th, 2007. Well, let's get right into things today. We saw a dramatic sell-off in the markets. We saw the Dow actually closing down almost 200 points, or 192 points, which was 1.42%. The Nasdaq was ended down almost 48 points, or 1.75%, and the S&P closed down about 21.5 points, or 1.43%. Now, there were a couple key interesting factors here as we get towards the end of the year, and just to point that out, there's two more trading days in the year. We have tomorrow, Friday, and next Monday. All right, the market is closed on New Year's, which is the following day after that anyways, and you see you have that day off of the markets, and we'll get back to things on Wednesday after the market reopens. Now let's talk about the market sell-off today, because it was due to a couple interesting factors. And here's the Nasdaq daily chart, and you guys can see I have the stochastics on here. I have my main moving averages that I like to trade off of, and I find that these are the most key ones in the market based on my daily chart. Now right off the bat, you can see this 200 moving average down here. This is the 200. Here's the 20 moving average, and here's the 50. Now over the last week or so, especially since we talked about a major move up, we did get that move up, and it moved up all the way up to this 50 moving average. Once we reached that 50, we altered our perspective on the market, saying, okay, we're going from a bounce perspective now to a sideways trading pattern perspective. And after that, you got 2 up days and now 1 down day. So overall, we're kind of trading in this sideways pattern right around that 50 moving average, which is where we expect to hover over the next couple trading days, the last trading days of the year. Once we get into January, we think that there could be some more downside in this market based on some more negative news coming out due to financials, due to housing, due to subprime, and consumer spending as well. So we'll continue to monitor that. But for now, there's a possibility we do see a little sell-off tomorrow, or at least touching of that moving average, the 20 moving average. But we'll have to really pay attention tomorrow to see where this candle occurs. Does it confirm it tomorrow with a move down? Do we have another move down that closes lower than here, and do we confirm that move below the 50? If so, we'd have to close tomorrow below the 50, but even if we do, we still have the 20 moving average right here as support now. So even if we close below, maybe we bounce off that 20 and then reverse back up. So there's a few support areas here to the downside that we'll have to watch very closely to see whether or not we take them out. Alright, so again, that's what we're watching for tomorrow. Tomorrow's going to be insanely light in trading volume. Alright, tomorrow morning should be okay. By the afternoon, things will lighten up dramatically, and obviously Monday it will be even lighter, as it is the 31st of December, New Year's Eve. So volume on Monday will be even lighter. Now, in all fairness, there was some news today that caused the market to sell off, or at least helped the market figure out that it needed to sell off, and I'll get into that in a second. But overall, the chart is telling us that after a move up of this dramatic proportion, you are going to have flat to sideways trading and maybe a small pullback, and that's to be expected. Everyone should know by now, after watching these videos, when you get a move up on this angle, look at the angle here. Alright, you draw a flat line there, give you the angle of the move. That's a fast move up. That's nearing a 90-degree angle. Alright, it's probably about a 75-degree angle or 80-degree angle. But in any case, a move up that dramatic, you need to have a little bit of a pullback, or at least a sideways trading pattern setting up for a possible pullback after the first of the year. Now, a couple things going on today. One is Bhutto, Benazir Bhutto, was assassinated by a suicide bomber. She was the opposition leader to Musharraf in Pakistan. Anytime you have any type of issues in the Middle East, there's going to be some problems in that realm of oil, and the market's getting a little jittery. So that is partly to blame, not fully to blame, but partly. As we said, the news just coincides. It's just a reason for the market to react some way, okay? And I really want to stress that. The market is going to pull back or move up depending on how the technicals tell the market to, where it needs to go. And we obviously got a little overbought, so likewise the news happens to coincide and lets the market come in a little bit. It's very unique that way, but that's why the technicals really tell the truth. And that's why we strive to analyze the technicals and avoid all the hype by the media, all the hype by every other outlet out there that can skew things. Companies tell us one thing. Honestly, we look at the technicals because they'll tell us the truth. We don't care for what companies say. Earnings, whatever, it doesn't matter. How many times have we seen earnings reported, great earnings, and a stock still sells off? Well, there's a technical reason for that in the charts that we can see. or we attempt to see at least. So anyways, that's one of the reasons. Also, the various economic data were reported around 8:30 at the same time as the death of Budo was announced, which caused selling off. Now let's talk a little bit about the intraday chart. Here's the NASDAQ, and you can see it was pretty much a steady decline all day. It was pretty much the sideways normal move, then the down move. You had the sideways move, down move. And this is a general pattern we see in the markets very often on selling days. Here you had a little more of a consolidation, but look at where it ran into trouble here, right along that 20 moving average. When it couldn't really get above that 20, once it closed back below, it got sideways trading again, and boom, we sold off pretty much right into the close there. Let's look at the ES futures chart here because this gives us a better intraday picture. Alright, here's 4:30 in the morning, so you see we're basically trading flat in the futures to even almost positive. Now here's 8:30 when the death of Budo was announced and the economic data, and you can see the sell-off that ensued. Alright, and it's just basically the same type of movement here. It's almost like a staircase down, and down here we did get a small bounce into the close here, right back into that 20 moving average. But you can see how moving averages on down days play such a dramatic role in the market. It really can be a signal for you as a short player if you're playing on the market on the short side to take advantage of that. In addition, it could be a signal to you not to buy there. If you don't play the short side, well, you never want to buy when it comes right into this moving average because more likely than not, you'll see a pullback. Unless you get a close above the moving average in this realm and confirmation, well, then maybe it goes to the 50 moving average here, and maybe it moves up here to the 200 moving average. So obviously, there's many ways to use the technicals here, the analysis tools that we provide or that we use on the charts to our benefit. We also use the stochastics and so forth. And in many ways, that's a nice way. Just something I want to point out here, folks. Look at this point right here in the market, and then let me erase these lines, and look at this point right here in the market. Okay? Let's look at the stochastics where those are. All right, you have the stochastics here, and you have the stochastics here. All right, that's not a good sign to see, folks. That's not a good sign to see in general. I do not like to see that. And that basically, to me, is telling me that we have another leg down here. Alright, now let's talk a little bit about the chat room today now that we've looked at the markets. And I just want to reiterate on the markets here. Let's go back to the NASDAQ. Actually, let's look at the SPY. We haven't looked at that today yet. Let's look at the daily. Alright, SPY, look at this resistance level it's came into right here. There's 3 moving averages right in this general area. That's a lot of resistance on the SPY to deal with. It's almost like a triple necktie. A necktie is a term used when there's 2 moving averages that come together and cross each other, and the stock or the index moves right into that point where they cross. That means there's a lot of resistance right there. And here they're not all crossing at the same point, but it's all the general area. So you have to assume that after a move off the lows here of such a dramatic proportion, it's very possible that you're going to hit some resistance in this area and see a little down move here. And again, we still think that there's going to be sideways trading here going into maybe slightly down, maybe slightly up, but generally sideways trading for the next 2 trading days based on the light volume, based on the holiday, and so forth. Alright, we also have to be aware that there is a possibility that we will see that down move in the market, or maybe a small sell-off on the 31st, as people don't want to hold positions into the new year, just on the off chance, and we hope that nothing would ever happen, but on the off chance of terrorism, you never know when you have these big holidays what crazies are out there. So keep that in mind as well. Alright, folks? Alright, now let's look at a couple other things. Number one, yesterday in the chat room, and I'm going to put up the chart here, yesterday in the chat room, we talked about this chart here, and we actually picked some up. And those of you that know the chat room know that there's multiple multiple things we do in the chat room. Obviously, we day trade, we learn about the markets, we discuss the markets. It's an open forum for everyone to talk about the markets, help each other out. In addition, we occasionally will pick up a volatile swing trade. Now, we have the swing trade alerts, which are a little safer. Those are larger caps, but we often play these volatile swing trades based on a few key factors. And yesterday, one of the volatile swing trades we played, that was talked about in the chat room and actually bought in the chat room at the end of the day, was this ADPI. Now, ADPI is a play here on the possibility of a settlement, and we bought yesterday at 550 right before the close here. Well, guess what happened today, guys? They started to, it looks like they're getting that settlement. Off it rocketed. You're talking about almost 100% move in this play that we had in the chat room. People, I know a lot of those in the chat room had over 1,000 shares. It went up $4.68 today to $10. That's almost a 100% profit on this play. Just a phenomenal trade. Risk reward was very good in that way, as down here the negatives had already been factored in. So anything positive that came out, which was what we expected and why we played this, would have gotten a major rally. On the downside, the worst case, they were going to have to pay what the jury awarded, and that was what was basically factored in. Maybe there was 50 cents to $1 downside. Upside, in the chat room yesterday, I said, yeah, there's $2 to $3 to $4 upside, and that's exactly what happened today. So that was one of the plays in the chat room, a phenomenal play. We have some others we're looking at to get into over the next few days. There is another one we're into. Obviously, I can't discuss it here because it's not fair to those in the chat room that pay for the service. Alright, folks, other than that, keep a close eye on where the market goes in the next day. Do we confirm the move down today? Do we bounce back up above the 50 moving average? There are a lot of key factors. We're going to look at the charts, and we will continue to check that out. Have a wonderful day, guys. We'll talk to you tomorrow. Bye.